Murray Bollier with Boosted Profits, and I wanted to shoot this special video for my friends with Keller Williams Commercial Realty to show how we can create a win-win scenario for them and their real estate clients. Let's jump right in by explaining what we do so you can see how this can benefit you. Over the years, the government has passed a bunch of tax laws that were designed to stimulate the economy. And right now, there's over 100 billion in tax incentives available to U.S. companies. But the sad thing is, over 90% of these companies aren't getting the benefits they deserve. Anyone who owns commercial real estate is eligible for these tax incentives, not applicable for residential. So what we do at Boosted Profits and our parent company GMG Savings is we identify potential tax savings for business owners in less than 15 minutes using a proprietary app asking a few questions. And we only get paid if we actually deliver the savings to the client. And if we do get paid, we only take a small percentage of the savings derived, which theoretically would not have been possible without our assistance. So the beauty of this system is we do all the work and take all the risk for your clients. So just to give you an idea of the money we're talking about here, I'm just going to throw out a scenario here of potential savings for a CRE property owner. So let's assume a building inside a commercial property, including the renovation cost, is valued on the asset on the books at $2 million. And let's assume that they have an annual property tax bill of 60 grand. So my question to you is, which of your past, present, or future clients would not be interested in immediate cash back or saving on property taxes? Do you have any clients who think they're paying the right amount of property tax? My guess is no. So here's a screenshot from our app based on 17 years of history, and depending on the industry, we've identified two potential savings, areas of savings for this sample company. Property tax savings would be an annual savings of over $10,000 a year. That's every year. And then a one-time commercial property incentive, owner's incentive, which is a fancy way of saying accelerated depreciation using cost segregation. It's a lot of words here, so stay with me. A one-time $148,000 saving for a total first-year savings of $158,000. That is a large amount of money for a owner of property that size. So this is nothing to sneeze at. This is definitely will get their attention. Here's another screenshot from our app going into more detail about cost segregation, the 148,000 savings, and some samples of companies that we've already helped. And here's another screenshot showing samples from our property tax strategy. So given all that information, how does this help you, the CRE realtor? Well, if you think about it, this is a huge potential value added service to your clients. All your clients are property owners, right? And these two areas of these two particular tax strategies out of the many that we do have line up perfectly with your client. So this gives you a significant differentiator from other realtors, opens more doors for you. For your past clients, all of them have the potential to buy or sell again. Once they buy or sell, they potentially could do it again. So you want to stay relevant with past clients, get more business. What I recommend you do is to contact all your past clients and say, hey, we've identified a way that you could get a one-time cash flow and or reduce your property tax. Are you interested? My guess would be they'd say yes. Any current clients that are in the process of buying property, this showing them these particular strategies would greatly accelerate their purchase decision. Immediate cash back makes property much more desirable. You can picture that. I'm sure you can picture that. So, and then here's another thing that's interesting. Based on our analysis, based on the articles we've read and research that we subscribe to, there's going to be over 18 million businesses projected to be sold, handed down, or closed in the next 8 to 10 years, given the current demographics of the economy. So out of 18 million businesses, how many properties is that? That's going to be a lot of properties. And these are going to be business owners looking to sell, right? And that means there are going to be other people that need to buy those. So how much more attractive would those properties be if you could get in front of those owners before they sell? So establish yourself with the owners before that happens. So here's a question I get a lot. If this stuff is so great, why doesn't every business owner use cost segregation to reduce taxes? The answer is there are many small and medium-sized businesses that just are unaware of this particular tax strategy. So many are unaware that they qualify for it. They just wrote it off saying, oh, I don't think we get that, just because they just don't know. And then there's the problem of having the bandwidth to implement. Many of these companies have outsourced tax professionals, so they stick to the block and tackle accounting, but they don't have the bandwidth to do this. Cost segregation requires an engineering study to determine which piece, the value of the individual components of a building, and that's not in the wheelhouse of most accountants. So these are some examples of why people aren't already doing it. So this is something that's hard to read, but if you look at it close, our company has established a partnership with Keller Williams Realty back in October 2012. Um, Based on the synergy of both organizations, this partnership will in every opportunity to make the best investment when purchasing commercial property by reducing taxable income and improving cash flow and ROI. This partnership will substantiate KW's commitment to excellence, which was confirmed with the 2012 J.D. Power How Buyer Seller Satisfaction Study, ranking them highest in customer satisfaction. So as of this writing, which is 6 years old, we had saved $300 million in tax savings. That's now up to almost $1 billion in 2018. This is an old press release, but the point being that if you're with Keller Williams, you may not know it, but at the national level, you have partnered with our company at the national level. So this is already a recommended strategy, and that's why I want to bring it to your attention. You can't afford to miss this. This is going to be a huge boost. All right. So if you understand the concepts I just outlined, we can help. Our company has been doing tax and cost remediation strategies for over 17 years. The two particular tax strategies that we showed you here, property tax reduction and cost segregation, are just two of the weapons in our arsenal to save companies money, but they are the two that all your clients qualify for. They may qualify for others, but every client you have is going to qualify for those two. So we want to highlight those. And as I mentioned earlier, we can estimate the savings in less than 13 minutes using our app. Again, I mentioned this, there's zero risk to the owner. We only get paid on a contingency basis and only a small amount of the actual savings generated. Now here's an important point. We work hand in hand with the tax professionals at those companies throughout the entire process, full disclosure. We want to keep them on board with what's going on, and so they can continually advise the business owner. And we find the tax professionals are fully supportive of what we do because these are IRS approved and IRS encouraged procedures. It's not like we're trying to sneak around and do things behind the IRS's back. They really want you to do this stuff. These are laws, and so it behooves us to take advantage of them. And we want to make sure we don't miss these opportunities. So to help your client and to get you more money. All right. But wait, there's more. So hopefully you caught the value of exposing your clients to all these tax strategies. But there's even more reason to do so, and there's a narrow window of time to do so by taking advantage of this one-time situation generated by the 2017 TCJA tax law change, which I'm sure you've all heard of. The major point of that particular tax law change is a reduction in corporate taxes from 35 to 21%, which is good for business in general, as income is taxed at a lower rate. But the downside is that the deductions have less bang for your buck. So when you file taxes every year, each deduction, the same deduction you filed last year, is going to be worth less next year. So we have a one-time narrow window opportunity to leverage the higher deductions based on 2017 rates before they disappear for good. So stay with me here. If we implement cost segregation, which is the one-time accelerated depreciation strategy using the 2017 tax rate, you'll get a 40% higher cash flow savings from that particular strategy than using 2018 rate. All right. Currently, as I'm recording this video, it's early March 2018. Companies are preparing their taxes based on 2017 activity at the 2017 rate. So in order to capitalize on this loophole and tax rate changes, cost segregation must be implemented into the 2017 tax computation to take advantage of the higher deductions allowable. Okay, it's a lot of syllables there. Hopefully you follow along here. All right, this is a timing issue. If you wait until 2018 to exercise this strategy, it will result in a lost opportunity. You will still be able to do cost segregation, but you're going to lose 40% of what you could have gotten if you did it this year. So why wait? The timing here is critical. In our example that we gave a few minutes ago with a property that generated $148,000 in savings from a cost segregation study using a 2017 rate. That savings drops to 89K if we wait till next year. So that is about a 60K uh, reduction in savings just by timing. And I don't think you want to wait. I don't think your clients are going to be happy if they knew they missed out on this. They're going to be very happy if you told them that what that could result in. All right. So my conclusion that I am trying to get the word out as much as possible that all U.S. businesses should not file 2017 taxes without at least considering the impact of cost segregation. You may not actually do it, but you should at least consider it and see how the numbers play in your situation. You probably have right now existing clients or friends who are unaware of this one-time tax loophole. This is a loophole. This is a nuance that, unless you really look at the detail on this whole tax thing, you could easily overlook. I find most people aren't aware of this. So the tax law changes are pretty complicated and pretty nasty. So this is something that's easily overlooked. So be the hero and show your clients this potential. You'll get enormous goodwill if you share this info. Get the word out. Make sure business owners and their tax professionals, they may not know this, make sure they understand the crucial timing here. Because once the books on 2017 are closed, this loophole goes away forever. You can still do cost segregation, as I said before, but there's a 40% reduction in the power of using that strategy. So, man, timing is everything, and this is a case where timing is everything. So don't miss out. At least consider it. So I hope that makes sense. I hope you can see the value of how sharing these cost strategies with your clients can obviously help your client, but give you a significant boost in your business as well. I'm excited to share this with you. I'm excited to help people pay less taxes. I mean, that's what it's all about. And I'd like to talk to you more about this if you're interested or if you want to strategize in your particular case. I'd love to work with you. Here's my contact information. My email is murray@boostedprofits.com, or you can we can jump on a call if you book a time on this link here, so I can block it out. In any event, I thank you for listening. It's been a pleasure, and I look forward to working with you and saving money for your clients and boosting profits of your company. So thanks very much.